Hi, I'm Alex Hughes, Portfolio Manager of the Intelligent Investor Australian Small Companies Fund. Thanks for joining me for the quarterly update for September 2019. Starting with performance, the fund delivered a 3% return for the quarter, which was slightly below the benchmark's 3.1%. Turning to the main contributors, Academies Australasia, the vocational education provider, increased by 58% following its full-year result, which showed good cash flow generation, higher dividends, and continued buying from directors. Dicker Data increased by 57% for the quarter, as its operational momentum continued with net profit up 50%, and also announced a special dividend following the sale of its old warehouse. And finally, RPM Global, the mining software provider, increased by 34% for the quarter as momentum built in its transition to selling subscriptions for its software. To the main contributors, Doneco International, the Southeast Asian casino operator, fell by 50% following an adverse court ruling in Cambodia, which is the location of its largest casino. And MSL Solutions fell by 33% as execution was poor for the quarter, and we've since exited the position. On to portfolio positioning. Our larger positions in Audinate, RPM Global, Seek and Lovisa remained unchanged for the quarter. Academies Australasia entered our top 5 following a strong run in its share price, in place of Hansen Technologies, which we trimmed prior to the full-year result. We deployed more cash for the quarter, with cash levels reducing to 6.8%, and we held 25 securities at quarter end. The attractiveness of equities improved with falling interest rates. However, we're mindful that we remain in the late stages of the market cycle. Animal spirits are flowing freely in certain pockets of the market, and the Australian economy has required considerable support in order to maintain a growing trajectory. It's for these reasons that we've directed more of our research effort towards more resilient businesses, and we now have 47% of the fund's assets invested in businesses with a market cap greater than 500 million. We've been very selective about the smaller and micro-cap companies that we've been researching. During the quarter, we added a position in Webjet, the online travel agency, which is a business I'm sure many of you are familiar with. It's a great business that generates lots of cash and generates high returns on capital, and we see good growth potential as more travel is purchased online over time. However, it's the company's expansion into the bed banking space that has us excited. WebBeds, as the division is known, provides the electronic plumbing that wholesale buyers such as travel agents use to buy hotels for their customers. Through a series of acquisitions, Webjet is now the second largest provider in the space, and this is a large, globally fragmented industry. We now think Webjet has a scale advantage, and that holds it in good stead to grow over the long term. And importantly, Webjet has a good owner-manager in place. The CEO, who's been in place since 2011, has proven himself to be a good operator and a good allocator of capital, and he's the company's largest shareholder, with a stake worth $70 million. So his interests are clearly aligned with ours. Now, Webjet's share price has suffered recently following the bankruptcy of Thomas Cook, the UK's largest tour group operator that was also an important WebBeds customer. The bankruptcy means that Webjet's earnings for the coming year will be lower than initially expected, and that's the reason the share price has fallen considerably. But we see this as an attractive entry point in a business that has good long-term prospects, good underlying momentum, and the recent downgrade is just a short-term blip. So we're quite enthused about the position over the long term. And it seems that the directors agree with us, having recently purchased around $500,000 worth of shares on market. So that's all from me. We'll be back next quarter with another update. If you require any more information, please see our website or give us a call. Thanks for watching.